Welcome to the Deep Dive. We're taking a look at the recent action in the Indian stock market, specifically that notable comeback in March after, well, a bit of a stumble from the highs we saw last September.
That's right. It's always, fascinating to watch the market's moods swing like that. In March alone, the Sensex jumped, 5.76%.
Yeah, and the Nifty followed suit, 6.3% gain.
Exactly. And what's really interesting, I think, is that the enthusiasm wasn't just for the big guys, the large caps.
Right.
The mid-sized and smaller players really kind of took off. The Nifty Mid-Cap 100 climbed 7.84%.
Pretty strong.
And the Nifty Small Cap 100 surged by, an impressive 9.43%. Really significant moves there.
Okay, let's try and unpack this. What was the real engine behind this recovery, and what are the key things our listeners should maybe focus on?
Well, the headline story, it seems, is the return of foreign institutional investors, FIIs.
FIIs, right. They injected a significant amount, didn't they?
Huge. $3.6 billion into Indian stocks just in March. And most of that actually happened in the second half of the month.
Okay. So our goal today, then, is to understand where exactly this international money went, what might have motivated these investments, and maybe most importantly, what this could all mean for you.
Exactly. Let's start by pinpointing where that $3.6 billion actually landed, because the data, it clearly indicates a preference for certain sectors.
Right. Leading the pack, by quite a margin it looks like, is the BFSI sector that's banking, financial services, and insurance.
Yep. They attracted a substantial $1.7 billion.
Wow, $1.7 billion.
Yeah. Then telecom came in second, still noteworthy, though, at $360 million.
Mm-hmm.
And then we saw the metals sector pulling in about $219 million. So, yeah, pretty clear picture of where that capital was flowing in.
And it's just as telling where they weren't putting money or where they were pulling it out from.
Absolutely. What's also quite telling is where FIIs chose to, reduce their holdings. We saw outflows from IT, amounting to $973 million. Big number.
Nearly $1 billion. Yeah.
FMCG, fast-moving consumer goods, saw about $643 million reduction. Oil and gas experienced $397 million leaving, and the automotive sector had around $327 million in outflows.
So looking at both sides gives us that more kind of nuanced understanding of their strategy in March.
Exactly. Adjustments.
So BFSI is clearly the top beneficiary here.
Mm-hmm.
What was it about that sector? What made it so appealing all of a sudden?
Well, it looks like several interconnected factors made BFSI attractive.
Yeah.
Firstly, valuations.
Oh.
After a period of consolidation over the past year, maybe due to, regulatory adjustments or easing NPL concerns, whatever it was.
Right.
Valuations within the sector just looked relatively inexpensive to foreign investors looking for, stable growth.
Interesting. So maybe after some challenges or just lower activity, these companies look like good value again?
Precisely. And secondly, the BFSI sector in India is, it's predominantly domestic focused.
Mm-hmm. Less tied to global wobbles.
Exactly. Its performance is less directly tied to global economic ups and downs. And in a world facing, let's face it, various uncertainties, that inherent stability can be a huge draw for investors seeking a safer harbor, so to speak.
Makes sense.
And thirdly, we should probably note the Reserve Bank of India's move. They began easing monetary policy back in February.
Right. The rate cycle potentially turning.
That action likely boosted confidence in the overall financial health and, the growth prospects for banking and financial services.
And the market reaction seems to back that up, doesn't it? The index performance.
Absolutely. The Nifty Bank Index, a key indicator, right? It rose 6.6% in March. And the broader BSE BankX index jumped even higher, 8.55%. And interestingly, those other sectors that attracted inflows also showed strong index performance. Nifty Metal up 10.6%.
Wow.
BSE Metal rallied 10.07%. Even telecom, with that $360 million inflow, saw its BSE Telecommunications Index increase by 6.48%. So the money followed performance, or maybe drove it.
Let's shift focus then to telecom. That $360 million, while less than BFSI, is still definitely worth a closer look. What was the main driver there?
The main factor seems to be consistent growth in average revenue per user, ARPU.
ARPU, right. The average amount each customer spends.
Exactly. Think of it as the average amount each subscriber spends on their mobile services monthly. This growth trend, it suggests telecom companies are successfully boosting revenue either by charging more or getting customers onto higher value plans.
Got it. So it's not just about adding more subscribers, which might be getting harder, but really increasing profitability from the existing user base. Do you have any specific numbers on that?
Certainly. If we look at Q3 of fiscal year 25, Reliance Jio reported an impressive 6% quarter-on-quarter growth in ARPU. reached 207 million per user per month.
Okay, with a huge base too.
A massive 477 million subscribers. Then Airtel, 355 million subs, saw even stronger ARPU growth, 6.5%, hitting 248 a month.
Higher ARPU there too.
Yeah. And even Vodafone Idea, with 201 million subscribers, they saw 5% growth in ARPU, reaching 164. So this consistent upward trend in how much each user generates, coupled with some pretty optimistic statements from the company managements, likely signaled a positive growth outlook to the FIIs.
That really clarifies the appeal of telecom. Now, let's flip back to the sectors where FIIs were selling. Oil and gas saw, well, a decent chunk of money leaving. What was the worry there?
The main worry seems to have been the potential for falling crude oil prices.
Ah, okay. Linked to global economy stuff.
Yeah, largely tied to the potential impact of, well, U.S. trade tariffs on global economic activity. The thinking goes, if tariffs slow down global growth,
Demand for oil drops.
exactly. Demand for oil, a key economic driver, tends to decrease, pushing prices lower. That's the fear.
And what about the auto sector? Also saw significant selling pressure.
The reasoning provided there points to a reported slowdown in auto sales.
Okay, just weaker demand.
Yeah, weaker sales figures can indicate softening consumer demand or other industry challenges, which just makes investors a bit less optimistic about the sector's near-term performance.
So even with these sales in certain sectors, it's important to remember FIIs still hold quite a lot across the board, right? It wasn't a total abandonment.
Oh, absolutely not. Even after the selling in March, BFSI, IT, oil and gas, auto, and pharma, collectively, they still represent something like 60% of the total value of shares FIIs hold in India.
So still the core holdings.
Definitely. We did see some minor shifts in their assets under custody, the AUC, basically the total market value they hold.
Right.
For example, the proportion of BFSI and pharma in their AUC saw a slight increase, IT and autos a small decrease. Oil and gas was pretty stable.
So it looks more like maybe portfolio rebalancing than a complete loss of faith in those areas.
That's a good way to put it. More of a rebalancing, yeah.
Now, taking a step back, what's the broader perspective here? Should listeners be thinking about specific investment decisions based just on these FII flows?
Well, one analyst we looked at holds a generally, optimistic view on Indian equities overall.
Okay.
Why is that? Their rationale is basically that the ongoing uncertainty around potential U.S. tariff policies, well, it could lead global investors to increasingly seek out more stable, high-performing economies.
And India fits that bill, potentially.
India is positioned potentially as a significant beneficiary if that shift happens. A flight to quality or stability, maybe.
That's an interesting angle. Global instability elsewhere could actually funnel money here.
That's the potential scenario, yeah. And specifically within sectors, BFSI and telecom are definitely being highlighted as favored by analysts.
Any specific names mentioned?
Yes, several banks came up as potentially attractive options. HDFC Bank, Axis Bank, ICICI Bank, SBI, Bank of Baroda, and Canara Bank were all mentioned.
Okay. Now let's dig into the metal sector. That saw some really interesting dynamics in March, including that big jump in the Nifty Metal Index you mentioned. What exactly was going on there?
Right, the metals piece is fascinating. The main catalyst for that surge was the U.S. government's decision to temporarily suspend the reciprocal tariffs it had put on India.
Ah, the retaliatory ones.
Exactly. This suspension is in effect until July 9th, 2025. Now, the base tariff, that 10% on certain metal imports, that's still there.
Right.
But lifting that additional 26% duty, even temporarily, was seen as a positive for Indian metal exporters. And at the same time, the U.S. cranked up tariffs on similar goods from China.
Massively, wasn't it?
Hugely. Up to 145%.
Okay, so this creates a kind of window for Indian metal exporters to the U.S. maybe, while China faces much bigger hurdles.
That's the idea, at least in the short term. And the stock market reacted pretty immediately.
How so?
We saw significant rallies in stock prices. Lloyd's Metals, Tata Steel, Hindalco, JSW Steel, several others, gains from like 4% to 7% just on that day. The Nifty Metal Index was the top performer.
But there's a but here, isn't there? It wasn't all smooth sailing for metals.
That's correct. Despite that initial jump, the BSE Metal Index had actually underperformed the broader market in the 5 trading days before this tariff news. It declined by about 5%.
So there were underlying concerns already.
Yeah, suggests some prior weakness or volatility that predated the tariff announcement.
And domestically, steel prices went up too.
Yes, domestic steelmakers hiked prices for hot-rolled coil steel by $1,500 to $2,000 per ton.
And that was linked to imports.
Reportedly supported by a significant decrease in steel imports into India during March compared to the previous months.
Okay, so less competition from imports lets domestic producers raise prices. Does this mean the overall outlook for Indian metals is suddenly rosy?
Well, the analysis suggests the benefits might be, a bit limited, a bit nuanced.
Oh, so.
The crucial 25% tariffs the U.S. has on steel and aluminum from most countries, including India, beyond this temporary suspension, they're still unchanged.
Ah, the main Section 232 tariffs.
Right. Plus, the huge U.S. tariffs on China could potentially lead to China diverting its excess metal supply to other markets.
Like India.
Including India, potentially. Given China's dominant position in global production and demand, that could put downward pressure on domestic prices here.
That makes sense.
Yeah.
Knock-on effects. But wasn't there a potential positive mentioned related to China's own economy?
Indeed. China has indicated plans to potentially implement more economic stimulus to boost its own domestic economy. Key leaders were set to meet, I think it was April 11th, 2025, to discuss this.
Right.
Any significant stimulus in China could boost demand for metals globally, which would definitely be a positive for Indian metal companies, too.
And that drop in India's steel imports, it seems like a clear short-term win for domestic players.
Yes, the drop in March imports helped domestic steel prices recover from recent lows. Combine that with lower input costs, like for coking coal. Analysts anticipate a healthy recovery in profit margins for domestic steel producers, starting probably from the last quarter of FY25. The expectation is for relatively stable steel prices and better profitability.
And other factors supporting near-term demand within India.
Correct. More government spending on infrastructure, typical seasonal demand from sectors like consumer durables.
Right.
And those lower import levels are all expected to support domestic steel demand near term. Plus, there's a proposed safeguard duty, 12% on flat steel products. If that goes through, it would offer more protection against imports.
So the near term for steel looks maybe relatively okay, but the report also had a word of caution for the broader metals sector.
Absolutely. Analysts highlighted that new metal production capacity coming online down the road could eventually cap how much prices can sustainably rise.
Right, more supply.
Exactly. And medium term, there are concerns about potential oversupply, both here and globally, plus the risk of a global economic slowdown due to all this tariff uncertainty.
And what are the potential downsides if these trade issues drag on?
Estimates suggest a pretty significant potential downside risk for metal companies in that scenario. One analysis pointed to a possible average drop of maybe 18% in EBITDA.
Oof, that's big.
Which is key for profitability, and maybe an even larger hit to their market valuations if tariffs stick around long term. Interestingly, steel companies are seen as maybe a bit more resilient than aluminum producers.
Why is that?
Due to existing domestic trade barriers and maybe that potential China stimulus helping steel demand more. But still, the overall recommendation for metals remains cautious. Analysts are basically saying, don't go bottom fishing here just yet, given the uncertainties.
Okay, let's try and synthesize all of this. What are the key takeaways for our listeners from this deep dive into March's market moves?
Well, the primary conclusion, I think, is that foreign investors really played a pivotal role in the March recovery, and they showed a clear preference for BFSI and telecom. Understanding the reasons like valuations in BFSI, the domestic focus, that rising ARPU in telecom gives valuable insight into where serious capital is going. But it's just as important to see where they reduced holdings and why to get that full picture.
Absolutely. And what was a particularly insightful or maybe thought-provoking point for you in all this analysis?
For me, it's that intricate web of global factors impacting even seemingly domestic sectors like metals.
Yeah, the tariff story.
The interplay of U.S. trade policy, China's potential economic responses, the cascading effects on Indian metals, it just really underscores how interconnected global markets are, how events far away can have real, tangible, and often complex impacts right here.
That's a great point. Finally, then, a question maybe to leave our listeners with. Considering these recent FII patterns and all this ongoing global uncertainty, what might be the next sector to see significant flows or shifts? And maybe what indicators could you watch to signal that change? Something to ponder.
Definitely something to keep an eye on.
Thanks for joining us for this deep dive.